It says you.
Right, there you go.
There you go.
Now it's recording.
Right.
Yeah.
Okay. Well, good luck, both of you. I'm going to start us up now, and let's mute our microphones when we're not speaking. All right. See you now. Bye. Good afternoon. Good afternoon, everybody, and welcome to the first of our series of webinars for 2024. I can see that a number of you are still joining, so just giving you a chance to do so. I am really delighted today to be joined by Peter Paul van der Wys and Elaine Cohen, who both have a tremendous amount of experience in this area of reporting. And Elaine, I've known for quite a long time. I think we've touched base many times at many reporting conference and discussed what our views were around different approaches. Peter Paul, I've not had the pleasure of meeting you in person, but I'm hoping that will happen following this particular webinar. So for those of you who are still joining, I hope you're settling down. We're looking forward to sharing our insights today. And just a few housekeeping rules. So this webinar is being recorded. We will have the recording available on a link on our website afterwards. There is an opportunity for a question and answer session at the end, so please do use the Q&A function. And we will endeavour to try and answer all your questions that you may have during this session. So I think without any further ado, we'll get started. Hopefully you can share my screen. We've got some slides, and we'll get going with our session today. So Peter, Paul and Elaine, I'll let you introduce yourselves. I think you are more qualified to do that. So I'll just mention that again now. If you're wondering why I've left them hanging and just said they're here, they are going to introduce themselves. So just very briefly about myself and about ADIA International. ADIA is a specialist sustainability and business and human rights consultancy. We have particular expertise in addressing forced labor and modern slavery risk. Our team have all got a legal background or have a legal qualification, and we look at how we can harness that expertise in bringing about practical solutions. So our real USB is putting the law into practice, and we have a dual focus on both people and business. We've worked across sectors. This is just a snapshot of some of the clients we've worked with over the last 16 years. I think that brings a particular insight and strength to what we do, because we're not honing in on one particular sector. We are able to understand the different challenges that many of these sectors are or companies are facing within these sectors. So I'm just going to give you a few thoughts where really I'm looking forward to handing over to Peter, Paul and Elaine to discuss some of these things in a bit more detail. This is a chart actually that comes from a report that has been produced by the GRI in collaboration with some other parties, Carrots and Sticks. I do actually remember when one of the first reports was produced, so that's maybe a sign of my age, and remember being quite excited to see how people were collating what was happening around the reporting space and in respect of how many policies and regulations were being developed at a global level. And you'll see that there is a split between the voluntary compliance or the voluntary requirements and the mandatory compliance in respect of the slide. One of the things that I think is really noteworthy, and I'm sure that Elaine and Peter Paul are going to say the same thing, is that the growth in mandatory reporting has been incredibly significant in the last 5 years. And this is really being underpinned by a growing role of transparency. And that of itself is driving corporate change. Now, whether that's driving corporate change to just meet compliance or whether it's driving corporate change to go beyond compliance is one of the things that we're looking forward to discussing today. From my own perspective, I think what is particularly interesting is just having seen how this landscape has grown and changed over the last 15 years, and also, you know, what emphasis is now also being placed on human rights issues. And when I started, I guess, understanding more about sustainability reporting, I saw so much of an emphasis around the environment. We still see that around environment, climate change, emissions, that side of things. But there had been less emphasis in laws around human rights. And this particular slide that I'm sharing is just an indication of that shift over the last 8 to 10 years, where we see that the laws that are being put into place now are the due diligence laws, which require companies to act on what they are saying they are doing, as opposed to just reporting on what they are doing, are covering both environmental and human rights issues. And that is a tremendous shift. And I think that for those of you that are listening today, I think it's understanding what is happening at international, at EU level, if you were still within the EU, or you are selling your products into the EU, or you are importing from that side. I think EU legislation is going to be particularly relevant, and particularly relevant when we talk about the Corporate Sustainability Reporting Directive. Now, I'm not going to go into any of these legislation and different standards in any particular detail. I just wanted to start highlighting, if you don't already know, that there are so many different reporting standards that exist in the UK and, of course, elsewhere. And the challenges that are going to be facing companies is getting their heads around what laws apply, what the scope is, and then how they're practically going to deal with that. And I think, you know, the two EU directives on corporate sustainability reporting and on sustainability due diligence are going to have a very big impact on a lot of organizations. What we're seeing in practice is that businesses seem to be getting their heads around CSRD, but not necessarily CS3D at the same time. And I think that, you know, that in itself is a challenge. Organizations need to be thinking about how the due diligence underpins the reporting in many cases. And I'm looking forward to perhaps some of Elaine's insights on that. I did also want to just point out that when we're talking about reporting requirements around human rights, forced labor, sustainability, it is relevant to know what jurisdictional laws are applicable. And a good example of that is the Swiss law. So, you know, a lot of organizations perhaps aren't even aware that they should be reporting under the Swiss law, and that when one looks at the exemption to apply the OECD framework, there is actually a very particular requirement around the ILO conventions, and that's often missed. People just think it's the OECD frameworks that apply. So and the emphasis is very much around child labor and conflict minerals. So, you know, if you are looking at reporting more generally, or due diligence more generally, if you're not aware of the particular requirements around child labor, for example, you may not actually meet the mark for that legislation. I also just wanted to pick up on the two sort of key international instruments providing guidance to companies on how to put effective due diligence in place, because the OECD guidelines and the UN guiding principles are particularly relevant now in relation to compliance. And the reason I say that is that, you know, UNGPs in 2011 was agreed as an international framework, a voluntary framework. It didn't create legal obligations. But the shift that's now occurred with the EU Corporate Sustainability Due Diligence Directive is that the frameworks of the UNGPs, and as I've mentioned on the Swiss law, also the OECD, are being pulled into the legislation. And that creates a different requirement. It no longer means this is voluntary. It means that if you fall within the scope of that legislation, you are going to have to demonstrate how you ensure you are able to report and disclose on your duty to respect, how you are actually evidencing that, how you're putting the principles into play. And that is significant because, you know, the UNGPs have foundational operational principles that are broad, and for companies that don't understand them, there is a period of learning and requirement that's needed before all of this. And actually, Peter, Paul, and Elaine might have something to say about the educational piece that might come into this as well when we're talking about compliance. Now, what I've seen in practice around reporting and due diligence is that the practical challenges, and I'm sure Elaine's going to touch on this too, is very often the fact that there is a lack of alignment internally. There's silo working. There's a lack of understanding of the compliance requirements, so that people may have a view or an understanding of a bit of the law, maybe not all of it. The data that is available that can be drawn on is often of a poor quality or non-existent. And then there's often limited visibility into the supply chain. Now, really, those are five very high level points I'm making. There are a lot of other challenges, and I know Elaine is going to talk about them, but they are just some of the things that we see quite often. And so just a few practical thoughts of how to put the law into practice. I think integrally understanding what the legal landscape is. So, you know, where do you operate? What laws apply? I am amazed at how many organizations we often talk to, and they don't know what laws apply when it comes to sustainability. And sometimes they don't know where to find that information. So getting to grips with what laws apply, then understanding what the gaps are. What are the gaps in your processes? What are the gaps in your compliance? What do you actually have in place that you can build on? What are the resources that you need? I mean, that is possibly also another challenge that I should have put in in the boxes in the slide before, is that resource is a continual challenge that we see that companies face. Sustainability managers are being asked to do more and more in their day job, and sometimes they are not skilled to do all of the sustainability pillars because they haven't had that training or the experience. So they might be very well versed in environmental issues, but not in human rights issues. So there's a big learning curve and often a resource gap. And then I think it's understanding how you align with international standards, how you document and process, you know, keep adequate processes and adequate documentation so you can evidence continuous improvement, which you will need for both due diligence and for reporting, and then understanding what data points are required. And the very last point I just want to make, which we're very excited about to share with this audience, we've created a new online due diligence platform, particularly to address forced labor, but it in some cases was also helping with ESG. And so this is one way of pulling your data and evidence together from your supplier so that you are able to assess your risk and then be able to report on what you are doing, and also to understand how you might deal with your high risk suppliers. So I won't talk more than that at the moment. If anyone's interested about to know more about Tabera, please do get in touch. And with that, I'm going to stop and hand over to Peter Paul. So Peter, Paul, thank you again for your time and welcome. Please do introduce yourself and I'll hand over to you. Just let me know when you want me to move the slides.
Excellent. Good evening. Thank you very much for the introduction. Good afternoon, everyone, or good evening or good morning, wherever you are. I'm Peter Paul van der Rijs, the Chief Policy Officer of the Global Reporting Initiative, which basically means that I'm trying to lead our work with governments around the world, as well as regulators and financial market authorities, trying to ensure that, and we're going to talk more about that, the alignment between standards, but also hopefully the adoption of the GRI standards in legal frameworks and disclosure laws and what have you. So building on what Colleen just said, maybe we go to my first slide, Colleen. I will, after we've heard about these disclosure laws and broader legal frameworks that Colleen mentioned, I would like to focus more on the disclosure laws and reporting specifically. And picking up, and already, I thought I'll start with addressing the challenge that was put out in the title of this conference, and by making the point that if you treat reporting as a compliance exercise, as a company, you're wasting money, but ultimately also missing huge opportunities. I'll start there, and then I'll talk you through a little bit more what's happening in the global landscape and highlight some concepts that are really driving the discussions at the moment. So next slide, please, Colleen. So I thought let's get back to it. It is a build site. You can build it up completely green if you will. So let's go back to basics. Why do you report? Well, it's all about better decision making, and then look at it from two perspectives. Internally, better decision making around understanding impacts and the related risks that come with those impacts. If you understand your impacts, you can make different decisions and better informed decisions. It will help with retaining your staff because they are motivated more and more, as research shows, about how companies address the impacts that they have. And we believe that reporting and the data that's collected through reporting helps inform innovation. And then from the external perspective, it's very obvious. We see in the capital markets requirements for this kind of information that's reported through corporate sustainability reporting because it provides access to capital. Investors are much more critical about how they use their investments and how they drive also sustainability. It provides access to customers, large corporations, large OEMs that are having a sustainability policy, want to understand the impacts their suppliers have. And now we're going a little bit too fast, Colleen. Sorry. Access to markets. The European Union is effectively asking companies to report, and if not, they can't get access to the market. Ease of permitting process, and again, attracting talent. So my point is simple. If you treat reporting purely as a compliance exercise, all these benefits that listed are here are missed, and that will be a waste of the investment. And it's actually doing the company a disfavor. So I would very much look at reporting as a key management tool rather than a compliance exercise. Now, taking a quick step back, for those of you who don't know GRI, let me quickly introduce the Global Reporting Initiative to you. So GRI was set up about 25 years ago to help companies and investors make better decisions about those impacts based on facts, not perceptions. So how do we do that? We've created a global common language to report on those impacts. We set standards that have been developed through a multi-stakeholder global process, which really defines what a company should report on specific issues in order to give a good impression of its impacts and address the concerns that these various stakeholders might have. We have a rigorous process, it's multi-stakeholder, and our standards are a free public good. By now, our standards are used by over 14,000 companies around the world. And then if you look at our standards specifically, and I'm going to pick up on a comment that Colleen made earlier, our standards consist of three elements. You have the universal standards that lay out the basic requirements for reporting, capture all the basic information that every company should report on, and then set a process for developing what are those significant material topics that the company should report on. Now, in this, the UN guiding principles and the OECD guidelines for M&Es have been incorporated, as are the principles of the ILO that Colleen mentioned in her introduction. So we have worked with those organizations to ensure that as we call them, these authoritative instruments are ingrained in our standards, and companies have a tool through the GRI standards to meet the requirements of these instruments. As I said, we have the universal standards. They will determine what are your significant topics. Then we have 31 topic standards that you can use to report on those significant impacts. On top of that, we are now developing sector standards to ensure better alignment between companies in the same sector, but also to give us the opportunity to address sector-specific topics, which we would not deem relevant for a global topic standard, but for a sector, it might be a key topic. So the sector standard gives us that opportunity to also address sector-specific elements in our standard set. Next slide, please. Now, because as I said before, the GRI standards are focused on impact. And this refers to impact on the economy, environment, on the people, human rights, of course, being an essential part of it. But we look at it very holistically. So we look at actual and potential impacts. We look at positive and negative impacts, short-term and long-term. And why is this important? Because all of these issues over time can also become financial material for a company. So it's very important for a company to understand this full set of potential impacts as a step up towards also understanding how these impacts might impact the financial health of the company. Now, with the sales pitch over, let me dive into 4 developments that we see globally that I wanted to discuss briefly with you today. So the first one is double materiality. Globally, and next slide, please. Globally, we have seen over the last, I'd say 5-6 years, a drive towards a system where companies are not only required to report on the impacts or only required how sustainability topics have a financial impact, but really give that full image of the company's role in the world by reporting both on the impacts on the world as well as to how the world impacts the community. The entity. The European Union has coined this as a term as double materiality. And next slide, please. The downside of the term double materiality in my mind is that it seems to imply that only elements that are both an impact on the world and financial impact should be reported on. But I do want to stress here, we should think about it as 2 perspectives. A company should report really both the impact on the world and how the world impacts the company in its own right. Also, it needs to address, of course, the overlap, but it's not that the convergence is the only thing that's relevant. It's also not that one of those perspectives is more important than the other part. And last but not least, I think it's, as I already said before, I think it's important for a company to start by understanding the impact it has on the world. Otherwise, it might have a chance that it misses impacts that over time will become financial material to the company. Now, next slide, please. Because I mentioned this as a global trend, and what we see really emerging from a legislative perspective is a global reporting baseline based on sustainability reporting or impact reporting using the GRI standards. And on the financial reporting side, we see that combination of the existing financial reporting standards with the new standards from the International Sustainability Standards Board, which provide this global baseline. At the same time, it's worth realizing that countries already have existing legislation in place. They have political ambitions to be had. So we're going to see, and we're beginning to see the emergence of as I depicted here, a layer on top of this global baseline that allows for local adaptation of reporting to meet the local context more specifically. The European standards are a good example, but we also see, for example, in the United States now, the SEC standard taking a lot of the knowledge that's in the GRI and the ISSB standards, but also adding an American component to it. So then the second trend, and Colleen set this up very nicely, I think, is around due diligence. So where due diligence was originally developed by the OECD to report on and force companies to think about their impacts and act on those impacts, not just report, but also identify and act. That whole concept of due diligence is being integrated in every element of reporting that a company does. Quite frankly, in my mind, it is the operationalization of the concept of precautionary principle that was out there a couple of years ago, where it basically said you are, if you think something can be wrong or can have a negative impact, you should start thinking about it and addressing it as a precaution. Well, I think the concept of due diligence has been very clearly identified. Has identified a process that's very clear in how to do that. And as you can see on the next slide, The process, as outlined by the OECD, consists of 7 steps, which are very clearly about embedding the policies, identifying and assessing the adverse impacts, preventing and mitigating impacts and actions. And I've put this slide in as an example of how we at GRI have incorporated this in our standards. But I can tell you that we've also been working very closely with the European Union to ensure that this whole concept of due diligence is also included in the European standards. So you'll see a very close overlap in approach and content between the European standards on this point and our standards because of the effectively the strength of this concept. Now, let me take that as a segue to, and I know we're going fast to a lot of ground, but I'll try to keep up the pace. If you look at the global landscape, which is the next element I wanted to quickly address. So really, think about it purely from a reporting perspective. And I know that people talk about the tsunami of acronyms, the acronym soup, but really there's at the moment from a comprehensive reporting perspective, there's only 3 major initiatives that we should consider. Are the GRI standards and the IFRS standards, which offer global, together, a double materiality perspective. And then in Europe, we have the ESRS standards set by AFRAC, which cover the double materiality perspective. All these 3 initiatives are very much aligned, and as you can see on the next slide, which is where I try to showcase that. So the GRI standards are in focus currently on all sustainability topics. The ISSB standards at the moment focus on climate change and general disclosures, and they will add over time additional topics to it. And the European standards, as we know by now, cover all topics, a wide range of topics, very similar to the ones that GRI covers. The main difference is indeed the focus, where GRI focuses on impact, and the ISSB standards are focused on the interest and the information requirements of investors. Mainly, the European Union has taken the middle road and has said we need to do both. Now,
Sorry, Peter Paul, my mouse is blowing up, and it's got a mouse, it's got a mind of its own. So I'll go back here. Sorry.
Yeah, no worries. And I think one last point on this slide. Indeed, the GRI standards are voluntary. The ESRS standards in Europe are mandatory, and we can talk more in the Q&A about who falls under it. And the ISSB standards are at the moment voluntary, but they are working with jurisdictions to get them implemented and mandated in various jurisdictions. And by the way, that's the same that's happening with GRI. I just had a call this morning with Taiwan, which is a country where, for example, GRI reporting is mandatory for all listed companies. So there's a little bit of a mixed bag on the GRI and ISSB side at this point in time, and the ESRSs are by definition mandatory for all companies. Next slide, please. But I think that there's good news, because as I already mentioned, these 3 organizations, recognizing jurisdictional needs and global needs, are working very closely together. And just in the last couple of weeks, we have signed a new MOU with EFRAC to further our collaboration on the next set of standards, but also we've published, and you can find it on our website, a first interoperability table, allowing companies that have already published a GRI report to leverage that investment to also meet the European requirements. So the interoperability table with EFRAC and GRI is there. We are, as a next phase, working on a digital solution on XBRL and multi-tagging, so making it even easier for companies to do. At the same time, a similar trend is happening with the ISSB, where we just last week published an interoperability table starting with the emissions reporting under GRI and under the ISSB standards. So really working together where there is interoperability, making that very clear and making it as easy as possible for companies to comply to these standards and collect once and report as many times as needed. Now, one last trend I wanted to highlight in the global landscape, because that's, I think, might become, it's on the next slide, Colleen. It's worth recognizing, and we need to see how this plays out. But starting on the left, we all know about the TCFD, which was an initiative started at the G20 and was looking at the financial implications of climate change. The TCFD came up with a framework which has now been adopted into S2 from the ISSB. So that's very clear. Then the ISSB was set up, but still there was already a discussion going on the task force for nature-related financial disclosure. And the TNFD published its framework in September, which is a new framework that companies will start to adhere to and that governments are beginning to refer to. Now, the good news is that the TNFD from the get-go has said we're going to follow the same logic and the model as the TCFD. So it's very comparable. And a company that has done the TCFD will understand the structure of the TNFD. Now, only last week at the World Economic Forum in Davos, the creation of the task force on inequality-related financial disclosures, and now also including social-related disclosures, was announced. And what this is indicating to me is that the world is expecting and requiring more financially related disclosures from companies over time. The ISSB at the same time is also working on setting up determining their work program going forward. So I think we need to see this in parallel, and at some point it would make sense for these task forces, which bring again tons of multi-stakeholders, to merge into the ISSB or align more closely with the ISSB. But at the moment, you will hear these terms going forward as separate initiatives. But at some point, I do think that similar to the TCFD, they will be integrated in hopefully the ISSB. Now, the last point I want to make is on assurance, because the world has the best standards in the world. That doesn't mean that every company is going to adhere to them. And I'm not saying that companies do that on purpose, but the implementation of standards is a lot of work, and the chance of things going wrong is definitely there. And we need to realize that greenwashing is fraud. It's that simple. So what we need to ensure the proper implementation of all these standards is an assurance standard. And there is a lot of work going on globally at the moment in the European Union, but also within the IFAC, to develop a global assurance standard for non-financial reporting. I think that's going to be important. And even though it's complicated and people said it can be done, I think on the next slide, I have some good news, because companies already see this as an important element. And so they've already decided, and this is a study done by the IFAC, to start assurance. Now, it's good to see that the GRI standards, and I'm very pleased to see that the GRI standards are the most assured of all the disclosure requirements. But I think what we need to get to from this voluntary state of play that we see here to a more mandatory state of play when it comes to assurance, to make sure that there is comparable data and that there is trust in the system overall. But I think this slide is a good indication that also companies are thinking in that direction. I think that's excellent news. Now, let me close with one more slide, because I know I threw up a lot of complicating things. I also want to make sure that you understand that from the GRI perspective, we're here to help. We're not letting you hang and just publish our standards. We are continuously working with companies that use our standards, but also companies that use, for example, European standards, to ensure that they know how to report and that they can report as effective as possible. So I mentioned the interoperability tables. We work on digital tools. We're providing training for practitioners. We have advisory services, and of course on our website you can find practical publication on how to. So feel free to contact us if you have questions. Pauline, let me leave it at that for now.
Thank you so much, Peter Paul. Sorry about the maneuvering around the slides. I think that was incredibly useful. Certainly also from my perspective, just having that overall insight into, what GRI does, how it interacts with the different standards, the kind of standards that we are seeing being built on a mandatory basis, and those that remain voluntary. And I will have some questions for you, but in the meantime, I think if we can go over to you, Elaine, and please do introduce yourself and I hope that my maneuvering of the slides will be easier or better, shall I say. Welcome, Elaine.
Well, thanks, Colleen. Well, I have fewer slides, so hopefully less manoeuvring. And thank you for the invitation to speak today on my favourite subject, sustainability reporting. Thank you for your insights, Peter Paul. That was a great overview, and I'll be touching on some of the points you've raised. So my name's Elaine. I work in the field of sustainability reporting, been doing this for about 20 years. I'm probably a sustainability reporting addict. I've written many, about 150 reports for clients all over the world. I work with global companies mainly. I work in the area of strategy and reporting. And pretty much everything I do is around reporting. So I'm always very keen to explore the dynamics of reporting and the evolution of reporting. And there's a lot to talk about all the time, particularly in these last few years. And this question of compliance, of course, is becoming more and more relevant. Peter Paul said that treating reporting as a compliance exercise is like wasting money, which is a bit weird when you think about it, because if compliance was really so fantastic, if it was really everything it's cracked up to be, then everybody would be working towards compliance. Everybody would want to be compliant. I mean, when you have to be compliant, compliance is the goal, right? So if not being compliant is not enough, what does that really mean? Does that mean we have to go beyond compliance? Maybe we'll go on to slide number 1, Colleen, please. So maybe we really need to go beyond compliance, which is also a bit weird, because beyond compliance is where it all started. All the voluntary sustainability reporting we've seen over the years has all been about being beyond compliance. Why? Because there was never any compliance that was relevant to sustainability reporting. The problem today, of course, is that compliance is a very different animal. The bar of compliance in sustainability reporting topics is much higher than it was 20, 30 years ago. And it's now, as we've seen from, and as we've heard from Colleen and from Peter Paul, that bar is going to get much higher, both in terms of the broader sustainability reporting frameworks that cover the range of topics, and also all of the different specific instruments and mandatory instruments on different topics, such as the US SEC that Peter Paul mentioned, on climate or on human resources and so on. In Europe, as we've heard, the European reporting standards, CSRD, they'll create a layer of compliance in sustainability disclosure that is far more detailed than anything that's we've ever had before, probably more detailed than anything anybody ever even imagined. The move towards IFRS and ISSB as a potentially legal requirement, the listing requirements for stock exchanges around the world, they're also pushing the bar higher. Not to mention the reporting requirements of large companies of their own supply chains. And that's a form of market compliance, not legal compliance maybe, but market compliance. And that's also driving a lot of the reporting approaches. So we hear a lot about compliance. What does it really mean? Is it an empty promise? Will people just tick the boxes and that'll be the end of that? Is it a double-edged sword? It'll create more problems than it solves. Is it an unnecessary burden? Is it a magic pill? It'll solve all of our problems. Does it actually lead to better business? Does it actually lead to better impacts on society and the planet? The drive to compliance brings many expectations, probably all of those and more, and many fears. But of course, compliance will only be as good as the way it's implemented in practice. In a way, compliance was driven to correct all the issues that we had or that people saw with voluntary reporting, because voluntary reporting was a bit of a, pick and mix. So let's see what compliance actually means. On the next slide, please. Let's think about those expectations of compliance and the risks of compliance. The expectation is that compliance will drive reporting in terms of greater accountability, greater consistency, comparability, that elusive objective that everybody who ever talks about reporting strives to achieve. It has to be comparable. Well, in brackets, I've got news for you. It's never going to be comparable. Comparability is a myth, but maybe we'll come back to that. The expectation is that compliance will drive comparability. It will drive allocation of resources to the reporting process and to robust data collection systems, and of course, to assurance. And it will convert what we currently have into what will be, as people say, decision useful information. Will it work? Well, yes, of course it will work to a degree. It has to work because compliance is the goal. Companies will have to get into line. Compliance is a legal issue. We all know that once the lawyers get involved, sorry, Colleen, once the lawyers get involved, the world of disclosure becomes a legal world. Even now, as lawyers review sustainability reports, they add in many safeguards, they reduce content, they add in disclaimers and forward-looking statements and cautionary statements, and they change words from "we will" to "we will strive to," or they'll change "we will ensure" to "we will aim." And the legal impact on reporting is very significant. I even just read today, I hadn't seen that before, that in France they are now adopting into law, I think, potential jail time or and significant fines for company directors who have not followed the CSRD reporting requirements. That will be, if in France you do not report as required in accordance with the CSRD standards, you could get thrown into jail. How interesting is that? What does that mean for legal compliance and the motivation of companies to be compliant? And in the world of voluntary compliance and sustainability reporting, I mean, let's face it, companies have not really been compliant, even if they've claimed to be compliant. Take any 10 reports that claim to be in accordance with GRI or with a SASB standard, reports, perhaps any reports, but even in the same sector or even in the same country, and you will see that the degree of completeness and detail of disclosure and nature of disclosure varies drastically. Any 10 reports, I challenge you. I have done this 1,000 times. I mean, a lot of what I do is also about benchmarking. And believe me, try to benchmark this data comprehensively, and you will end up going round in circles, right? So even when we've tried to be compliant with voluntary framework, it hasn't worked so well. It's worked partially. It's better than nothing at all, but it's still far from the absolute conformance with the requirements of these voluntary global standards. So the risks about compliance are around, will we start drowning our disclosures in legalese? Will we start couching everything in legal language or hiding behind a legal framework that doesn't really enable us to express the full extent of our impacts as a business? Will companies use the compliance requirement as an opportunity to work at the level of ticking the boxes to deliver the minimum reporting requirement? As I say, if compliance is the goal, all you want to do is be compliant. Is this what we really want? A mechanical list of data points and policy disclosures? Is that enough to give confidence to investors and stakeholders that a company is making a contribution to sustainable development? And will it deliver sustainable, and that the company will deliver sustainable financial returns? The risks of compliance are that companies will treat compliance as a goal and go for minimum transparency, minimum creativity, minimum engagement. And in any event, it's going to be partial at best. We're not going to see this global baseline being implemented globally. It'll be a partial global baseline, maybe, but it'll be, there'll be many different frameworks, and all of this investment in interoperability, is just putting plasters on the fact that we really cannot get to a global baseline, I think. Sorry if that offends anyone. So there are expectations of compliance, there are risks of compliance, but there are some good things, what I call the building blocks. Let's look at those in the next slide, Colleen, please. You see, the benefit of the whole drive to compliance now is requiring a number of things that will really help companies elevate their understanding, accountability, strategic approach to sustainability, performance, and transparency. Let's not forget that reporting is not the primary objective. The primary objective here is that companies will improve their impacts on people and planet and contribute more effectively to sustainable development, as well, of course, as remaining financially viable or profitable as they grow. The question is compliance going too far? Is the massive amount of detail in these new compliance frameworks going to be defeating the purpose? Are we going to become too focused on the practice of reporting rather than the outcome of reporting? I will have great reports, but what about the performance? What about how we're benefiting the planet? So these three things, double materiality, external assurance, and alignment with an annual report timeline, are three building blocks that will help create better performance and better reporting. Next slide, please. And this is why. Double materiality, we've heard about that from Peter Paul. It's a good thing, right? It ensures that the business focuses on the issues that matter most to all stakeholders, both those who need to understand the impacts on our lives and those folks who need to make money, right? Investors, analysts. It's the highest common denominator, meeting the needs of all the standards. And it enables you to get such a good view of all of the different ways your business is impacting and impacted, that it can really inform and help you develop and support a strategic approach. Let's face it, materiality hasn't really been super rigorous over the years. Where there've been sort of lots of responses to, hundreds of anonymous survey respondents who said that climate is important, or human rights is important, but it really hasn't been a fact-based exercise for most companies. Double materiality with good process will help bridge that gap and take it forward. Alignment with reporting, annual reporting timelines will help companies synchronize decision-making, and it'll help resource allocation across the business. It'll provide stakeholders with a complete view of all the different impacts of and impacts on the business. And of course, as we'll say, external assurance will be part of the compliance process, and aligning that with the annual reporting timeline will facilitate all of the assurance processes and audit. External assurance certainly adds credibility. I mean, how many reports have I read who say, we have verified our information internally? Well, I mean, that doesn't really cut it. It's like, hey, I marked my own exam paper. Well, who does that, right? But the main thing about external assurance is that it really helps companies identify the gaps and the errors. Every company I've ever worked with has got value from that process, and making assurance a requirement will be a real driver in elevating the quality of reporting and the quality of information. So these three building blocks, if fully embraced by companies, and that means doing them well, properly, not just back of the envelope exercises, they'll facilitate enhanced transparency while enabling engagement and creativity to align reporting with the brand voice and with the company's individual purpose and impact. It won't just be about ticking boxes. It'll be about really understanding what the business needs, how the business impacts, and what the business is at risk from. If I had to add a fourth thing, I would add board oversight. You know, the sustainability journey cannot be left to the whim of the CEO or the pressure of another day. Board oversight should really be an integral part, whether it's a building block or whether it's an outcome of these other building blocks, I don't know. But bottom line is the boards need to get on board with all of this process and be accountable. I'll finish up quickly on the last slide by asking the question, well, how do you go about all of this? I mean, I haven't gone into the details of whether you should work with this standard or that standard. You know, all of those things are part of the process, but really, you have to be compliant. You have no choice. So if you want to get the added value of compliance, then we don't need to go, we're not going back to compliance, we're going back to beyond compliance, right? Even if that compliance bar is higher now, we want to be beyond compliance. And that means starting with your purpose as a company, analyzing your impacts in terms of impact on society and planet, understanding the financial implications of those issues to your business, double materiality, developing a strategy, engaging your people in understanding the why and the what of the strategy and what it means to them in their daily work, implementing the strategy and ensuring you have the necessary rigor and assigning the resources needed, not as a discretionary budget, as an afterthought, not as optional, but as a core element of the way you do business. So you should approach reporting and the reporting process as something that will be beneficial to your business and to your strategic performance, not just ticking the boxes. It should be your report. It's part of your brand. It's part of your message. It's not a standard 10K that looks just like everybody else's 10K. If you do it this way, you can still tick all the boxes, but the ticks are not the stars of the show, right? So that's really all I have to say. I think, you know, back to beyond compliance is what the leading companies will be doing. And they'll be building on, you know, probably a very good baseline of voluntary reporting. Oh, back to you folks.
Thank you so much, Elaine, and thank you, Peter Paul. I have a number of questions. I see there's one that's come through as well on the question and answer session. I just there are two things, Elaine, that I just do want to as you were the last one speaking, just to perhaps pick up on. One was I thought it was very interesting the reference to the lawyers. I would of course have picked that up, and I'm afraid to say, put my hand up as well, that I have actually been part of that process of saying will be and softening the wording. I just wonder if you have any particular views on how perhaps lawyers might get better educated around the whole transparency angle, because certainly, you know, majority of lawyers are taught to be risk adverse. They are taught to be able to spot these things. And I think, you know, from our perspective, the reason we may change wording is where a company is not able to have the underlying processes, which goes back to the due diligence point. So I just wonder if you wanted to perhaps just pick up on that question around, you know, how do we deal with the lawyers? How do we deal with that transparency angle? And Peter Paul, you might have a view on that as well.
Yeah, I think first of all, I didn't want to be critical actually of the legal input. I think it is a vital and important part of the reporting process. For me, the way to address, and it's clear that, you know, the legal mind comes from a different standpoint to the, you know, sustainability reporting. Hey, let's be transparent and let's tell it like it is type of approach. I think there is some middle ground. I don't think we need to say everything about everything. And I think we do need to be careful about, if we're saying we will ensure, that's a promise. And if we don't know how we're going to fulfill that promise, then we have to be a bit careful about making that promise. I think the way to address that with the legal team in any business is make them part of the team. Don't just write your report and do everything, you know, put everything in there you want to, and then send it to the lawyer for sign off. And that's what happens a lot, right? Get the legal team involved from the outset, understand their concerns and, you know, their guardrails, and work together. And 90% of the time, I'm sure you'll find a middle ground that's acceptable to the legal team, and makes sense to the legal team and delivers the transparency and accountability that the sustainability team needs. Occasionally, there'll be a, you know, one or the other will take precedence, but make them part of the team. That's my my advice.
Thank you, Elaine. And Peter Paul, did you want to add anything to that?
Yeah, two things to add to it. Having worked 15 years with litigation lawyers in the US, I know where this question is coming from and also how it can derail completely. So two things on my side. At the end of the day, so I agree with everything Elaine said, but also make sure it's clear who has the final say. It's not necessarily the lawyer. I think it's the board. Back to the slide we're still looking at. Secondly, it's worth understanding your legal framework within what you work. So at the US, where everything is allowed unless the law says it's not allowed, versus in Europe where there's this concept of family and good neighbor, that's a completely different starting point. So also for the reporting professional, understand the legal mindset where it's coming from, and because that will inform the conversation.
I think that's very helpful, and actually just another point, actually not just relating to the lawyers, but perhaps relating to the board, which has come up a few times. You know, the oversight and the requirement for the board to be involved in, and now, you know, potentially even more robust requirements for directors because of the potential of going to jail, which we've seen in environmental lawyers years ago. Any particular thoughts about the education and the involvement to the board? And I'm saying this also keeping in mind that, you know, when I started talking about the distinction I'm seeing between the understanding of CSRD versus CS3D, and that I feel they're interlinked, and then the separate conversations that are taking place. So just any thoughts from either of you on that point in terms of board, you know, informing the board, getting the board oversight, getting the involvement.
You go for this, Peter Paul?
Yeah, from my side, I think it's very important to educate the board on the requirements, on the differences with CSRD. CSDDD is a good example where CSDDD sets the expectations of behavior, whereas the CSRD sets the reporting requirements to make sure that what you set under CSDDD that you actually do. So I do think boards need to be brought up to speed, and traditionally, and no offense, but there are people in boards classically who've been in business too long and haven't been part of this transition that we now see towards more ESG. So there is a backfill in knowledge, if that's a term I can use, that's needed.
Yeah, and I agree, not only in knowledge, but in motivation. I mean, typically, you know, being a board member has been an easy ride. You know, you sit around, you have a meeting every once in a while, you say what you think, and that's the end of that. No accountability. I think today the expectation is that boards will step up. They must know what the issues are. They must be able to understand the issues and take decisions on them. There are many ways to help the board do that. That's a webinar all on its own, possibly several. Just a couple of things spring to mind. Firstly, board committees. If boards today that don't have a committee that includes an ESG committee, a sustainability committee, a CSR committee, something like that, that helps the board address these multiple issues, that's they're lagging. The best boards have that board committee. If they don't have a board committee, they may have an advisory board, perhaps an external advisory board that helps the board understand and work through these issues. Board members need to educate themselves. There are many ways to do that these days. There's a great program called Competent Boards, which is for directors and also for business leaders who advise directors. I've personally done that program, and it really gives a great grounding in all of the issues that board members need to be aware of and consider. And there are other training programs that help build education. And of course, sustainability needs to be on every board meeting agenda. It needs to be there. Board retreats, a couple of days, have a climate scientist come and talk to your board for a few hours and help them understand the issues on climate, on human rights, etc., etc. There's no excuse not to develop the competencies of your board these days, and it's going to be even more critical, as I say, as accountability of board members is now really in focus.
Yeah, thank you, Elaine. I would agree with the training element. We do a lot of bespoke board briefings, particularly on the issues we've just discussed, and have an online training. So I totally agree with that. I just have to smile because there's one thing I can't let go of, is that our logo for 16 years has been leading business beyond compliance. So this is a great way to start 2024 discussing how do we get beyond compliance, and been such a delight, Elaine and Peter Paul, to have you both here today. And I just want to, and thank you to all the participants. There was a question about there being a recording. Yes, there is a recording. I will let you know whether the PowerPoints can be shared. I had forgotten to ask Peter Paul and Elaine if they were happy for me to share the slides. If they are, then that's fine. You can just write to me and we'll send a copy. And yes, so just thank you again and wishing you all well. And we look forward to you joining us for our next webinar, which we're going to be discussing living wage in April. So to join us, so look out for our communications on that. So thank you, Elaine, and thank you, Peter Paul, again.
Thanks very much. Thank you.
Have a lovely day. Thank you so much.
Yeah. Bye, everyone.
Thank you. Bye-bye.